Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hinks. Now time for our cash tag segment. We're going to focus in on Home Depot. Joining us here in studio is TD Ameritrade Network contributor Jenny Horn, and from LikeFolio.com, the co-founder Landon Swan is with us as well. Jenny, as I said in the tease before the break, home improvement has been huge over this past 18 or so months. I'm wondering if there's any more projects left to be done.
Right. Have you already fixed enough of your home? Maybe you've sort of tapped out all of your different projects. But I do think that is a concern. And that's sort of why profit margins in this current quarter are expected to shrink. But really outside of that, expectations for this report are very, very strong. I mean, they're likely to report another sales gain after seeing this strong improvement in home improvement products and also building supplies in the first half of this entire year. Now, the CEO actually said back in June that there's also been a sequential improvement in the company's pro business since the start of the pandemic. And we're seeing the annual growth rate of spending on home renovations and repairs is expected to reach about 8.6% by the middle of next year, up from 5%. So this is now still continuing to grow even as the world returns to normal, which I find very interesting. Now, there is this question about profitability and outlook for the next few quarters, and they are expecting sales of growth to slow, only rising about 6% to $40 billion. But any increase here I see totally as a win, given the fact that Home Depot increased its sales by 23% in the same period last year. So they have really seen growth, continue. And eventually, I do think this has to slow as the economy normalizes. Now, customer traffic is also expected to improve this quarter following a strong customer traffic of about 20% in the previous quarter, so another strong metric there. Now, there are some risks, and one being the rising cost of lumber prices, another being the surging costs in transportation and some of these just supply chain issues we talk about with so many other retailers, especially the big box retailers. So the biggest question really I see in this report will be regarding Home Depot's guidance. What can they do in the back half of this year, and what can they do amidst so many of these sort of factors that are out of their control, like the rising costs of commodities and also supply chain. So that brings me to our first tweet today, which sort of touches on some of these risks going into this report, which says, "I love Home Depot, but I hate to admit I have no choice but to buy some earnings puts this week. High cost of building materials, which slowed/stopped projects. Last guidance was set high, so even if they meet projections, next guidance should be lower. And no stimmies." So I think that this is a good point, and these are sort of all of the same risks I saw echoed throughout analysts today ahead of this report. And now our next tweeter focuses on sort of this ongoing debate between Home Depot and notably its biggest competitor being Lowe's. So our next tweeter today touches on that sort of rivalry, which says, "Since March of 2020, Lowe's has nearly tripled its stock price and Home Depot doubled, as both top the performance of the broader market. Maintaining that frothiness will now hinge on courting professionals to buy materials like lumber and piping from them." So I think this is sort of why the CEO did come out in June and say, hey, this business has improved since the start of the pandemic, but I don't think it's yet back to these 2019 levels. So Landon, with this home improvement and Home Depot, what are you all seeing from your data regarding this upcoming report?
Yeah, so I mean, if you go back to 2020 of April, I think, everybody started talking about home renovation. It was unbelievable, something that we didn't really see coming. I don't think many institutional investors did, but the data was very clear. You stick people in their house for a while and you send them checks, they all of a sudden start wanting to change the carpet and change this room, paint the walls. And home renovation data went through the roof. That's when LikeFolio issued a buy alert at about $210 on Home Depot, obviously doing well since then. But that data has actually, and you can see that huge spike here. This is a crazy chart because normally that green line, that's purchase intent, 90-day moving average. You could normally see a wide variance in the seasonality where summers where people do home improvement projects, but the spike from home renovation and COVID just completely flattens the y-axis, and you can't really see that anymore. So really this chart is all about what happened in the past with COVID and showing that home renovation was huge then, and it's actually starting to normalize now. There's still a lot of things pushing that. I mean, there's not a lot of homes being sold right now. And so if you can't get a good home that in your price range, then you're going to improve your own home. So that's still driving it somewhat, but home renovation is down about 32% year over year when you look at how it was last year. Of course, that's very, very tough comps. But so that's been driving a lot of things for Home Depot. Of course, the lumber prices were insane. They've come back to earth now. So there's a lot of kind of X variables that are out there that are going to cause I guess, concern for this earnings report. Long term, we love this company. We think that they're doing extremely well. They've actually just recently passed lows in happiness, which is something that they've not been able to do for a long time. So you look at people talking about positive or negative experiences. It's always been Lowe's on top. It's not been quite as dramatic as a Target versus Walmart, but Lowe's has always beaten Home Depot. Recently, Home Depot took a slight edge in happiness, which is unusual for our data. And we're actually seeing that Home Depot is doing slightly better on this earnings report when it comes to our earnings score than Lowe's. However, we're bullish long term on Home Depot, but I have to say this particular earnings report has us concerned. We've got a negative score for them, and so I would say that based on a little bit of a decrease in demand versus very, very difficult comps, and the fact that expectations are likely very high, as you talked about, especially with the stock price basically at all-time highs right now as we speak. I think that expectations may be a little too high, and it might be difficult to keep up with them. So on this earnings report only, I'm a little bit leaning bearish, maybe buy some puts against shares that I own, or maybe sell some calls, or try to pick up some more shares next week if the price does decrease.
Yeah, Landon, I look at what Home Depot has done, and if I can say one thing about Home Depot, they have a knack for staying ahead of where the demand is. And what I mean by that is they upgraded their digital systems when? In 2017. They invested a bunch of money and put money into digital. What a great play by them. In 2020, what did they do? They bought HD Supply, which focuses on general contractors and professionals. Another great move. So the question is, what's their next great innovative move that this company has? Is what I would ask, because I tend to agree with you. I think you could say that about all retail, though. They've all run way far where I can justify being in some of them. They're overbought. So many retail stocks are overbought. Do you guys see anything, any mentions, any pipeline effects where they may be innovating in a new way? Because if not, you're right. This stock has run way too far, and the expectations are going to have a big trouble, living up to them. Let's put it that way. I'd be interested if you guys know anything about that they're doing going forward, because I don't see anything other than what they've already done, which is completely impressive. Landon?
Yeah. So I think a lot of it has to do with what you talked about, the investment into infrastructure and technology. And they're actually, one of their goals over the next year, they're opening up more distribution centers. One of their goals, and this would be a lofty one if they hit it, is to be able to have next day delivery to 90% of its customers. And so if they're able to do that, that's really strong, especially, depending on what kind of materials or products you're talking about. I mean, that could really be a game changer for a lot of contractors and professionals. So if they're able to do that, I think that's huge. So I think that you're right. 2017, investing in the whole digital space and getting ahead of it, they were 3 years early on that, and then it obviously paid off. Digital and curbside mentions are actually higher than they were in 2019, about 16%. So there's a little bit of stickiness, a little bit, not a ton. It didn't completely change the way that people shop. I think a lot of people still like to go into the store, look at a couple of different things, touch, feel, all that. It's different when you're talking about physical goods. But they do have that increase in curbside and digital delivery. But the fact that they're going for 90% of customers having access to next day delivery over the next year or two is really strong, and they're opening up those distribution centers to that level, to that goal. So they know what they're doing. They have a good long-term goal. They've shown that they can execute. I think their stock price is a little bit ahead of things right now. We'll see, but we've got a negative earnings score on them, but not as negative as Lowe's. So if you're looking at between the two, if you had to short one of them, it'd be Lowe's. But Home Depot still, we're looking for a small pullback here on earnings.
Okay, so Landon, in full disclosure, Home Depot was an essential business, so I went to Home Depot, I think, every week for the last, 56 weeks, especially during the pandemic. I go to Home Depot a lot. So I was curious, I don't disagree that the price activity is concerning, and that, of course, sort of governs, what we feel going into this earnings report. But I will say that from going to Home Depot so often, I do notice this sort of trend of seasonality where right now this current earnings period will encompass these summer months, which I have to imagine is very strong for a company like Home Depot with their garden center and people are just spending more time outside. So I am curious if seasonality plays any role here in this current report, because I do have to say, from going a lot, it's been very packed recently.
Yeah, absolutely. So seasonality is huge for Home Depot, at least in past data. It seems like everybody likes to do projects when the weather's nice. And so we've seen a monster peak every summer, and then there's a little bit of a lull in the winter. My concern is, though, that because there was so many people doing home renovation projects April, May, June of last year going into that summer with their stimulus money being stuck at home, and now with, there's sort of home shortage where you can't get a new home, so you're going to upgrade yours instead. A lot of that work has been done. A lot of that demand has already been pulled forward, and expectations for summer are always very high for this company. So if there was any demand that was pulled into previous quarters and it's not there now, and if summer's not a huge boom like everyone is expecting because of past seasonality, then I think that's the recipe to disappoint investors, especially with a stock sitting at all-time highs.
Landon, tip our hats to you again, as we have every time we've talked about this space, to the call last year. You guys were very early on this move, but I can't help but notice Home Depot's really made this meteoric rise in two separate moves. The first one, of course, in March, corresponds to the massive run-up in consumer purchase intent mentions that we saw last year. But then this most recent one in March of 2021 doesn't correspond with anything on your guys' data. And I know that there was things like lumber prices going on at the time, but is that concerning when you see things completely decouple at all-time highs, that maybe things are a little bit, I know this is kind of the thesis behind your guys' call right now, is that the stocks just run a long ways. The company's still executing well, but when you don't see the move match up to data, from what I've understood over the years, is that's a divergence, and in this case, this is a negative divergence. So just to wrap this up, Landon, this is negative because the stocks got ahead of the data, correct?
That's part of it, right? I mean, I think that, when we look at earnings reports, we look at what is the acceleration of purchase intent, what's the acceleration of mentions, and what's the acceleration or change in happiness. So it's all about the change in time. And so we compare that to a baseline of previous years, and we say, what would we have expected on this earnings report when it comes to mentions purchase intent as it correlates to revenue? And so what we're seeing now is actually a slowdown in those mentions and a slowdown in the growth of purchase intent. So we're not seeing the data be supportive of what we would have expected given all other variables. The stock being at all-time highs is kind of a bonus and saying, hey, I think that expectations are extremely high here. And if we see anything that's just a little bit of a miss, that should be very concerning for those bullish investors. So that's kind of a pairing effect of the data and the stock. So it's not just the stock. We are actually seeing a little bit of a slowdown in the growth. Again, sort of the derivative of the data that's telling us that maybe things aren't executing as flawlessly as many may expect.
Thanks for that breakdown, Landon Swan, the co-founder of LikeFolio.com. A little bit of a look into the secret sauce that is LikeFolio.com. Thanks as always